Good morning, it's Graham Bibby here, and it's the 12th of the 12th, 2014. For you listeners out there, a very good morning from the beautiful sunny paradise island of Phuket, where you can actually live the dream. Now, I've got a few stocks to talk to you about. I just wanted to start off with the Nasdaq. That's the composite. It's what they call a tech-heavy Nasdaq. On the whole, for the week, it's you see here since December, it's kind of slightly off. And I've had a few videos about this, but I had a sell-off in January, making us go to cash. Then we tried to break out, then it reversed, and we went to cash. This is not good because this is not a prolonged trend, so we have no time to lock in any profits. And then we started a new uptrend here, which seemed to be okay. A few things sold off here. This looked great because we were going to new highs, and then we had this sell-off, which is really weird, and this is what they call a V-shaped recovery. But what's great is we've gone above this previous resistance level. This should be support in the future. It was up a bit last night. If we go up again next week, that would be very good for the Nasdaq. I want to show a few of our stocks. This is United Continental. The airline stocks, we've been in and out of them a few times. They have very strong forward earnings growth, very low PE ratios, making their pegs exceptional, their PE to growth rates. This is the start of the year for this stock in January, and then it rose, looking like in a good trend following the trend of last August, only to come back, go up, come back, go up, then start a downtrend with the market because stocks are driven by the overall market psychology. Then off we went up again. Okay, maybe we're going to break out, but then we sold off again, up again, sold off again, up again. Try to break out here. This should have been positive and moving in this direction. And then the whole world markets went negative, and we had this. And when we were breaking below 40, this was a very bearish sign. And then on a dime, we turned up, broke through this, and I have no ego to support. I don't use emotion. When we broke out, I was happy to get back into stocks, and this is the current uptrend. And this stock was up 3.31 last night. Looks very, very good. American Airlines, another stock. This is fared slightly better. This is January. It had a reasonable rise here to March, then that sell-off, then try breaking out, and then ups and downs, then the sell-off. Significant sell-off here from 45 to below 30. That's 30% in 3 months. And then we broke out of this downtrend, and we're in a firm uptrend, and we're up 3.25. So that looks pretty good. Facebook, well, I kind of love this stock. I think they're going to do all sorts of amazing things and make exceptional profits. Having said that, we follow the rules, so I don't care how much I'm in love with the stock. I don't actually love them. I think they've got great prospects, but if we're in correction phases like this of last year, or this of March this year, we're out. So what's great about this stock is we broke out here in June, went into this uptrend, and we broke above this high. So we broke above the high in July, tested back, and then normally we get a strong upward move. Well, we had an upward move, and then we sold off with the market, and we've been meandering sideways. But last night was a 2% upside. Looks good. If we can break above this 80 level, it will be phenomenal, because this sideways movement is a bit like if you can imagine a long tube with a ping pong ball in it, and you're shaking it to get the ping pong ball out. You're building up vibration. When the ping pong ball comes out, up or down, it normally moves quite strongly in that direction. So this, you could say, is a trading range, because we're trading between 2 points mainly. You could say the upside is 80. And we haven't sold because we didn't really break the stop loss. We were marginal on it, but we didn't break it. So we held it. And right now it looks as if it's going to attack the upside of that band. And if it breaks out, that will mean it broke out of the tube to the upside. And historically, the longer this moves sideways, the greater the move will be in the direction when it breaks out. So it should have a very nice up period. Now, there's a couple of stocks I'm recommending today. Just want to show you why, besides the peg ratios. One is SYNA is the cold Stocks look great. The fundamentals look great. But from July to November, it corrected from about 91 to 60. So these corrections quite severe, 30%. But we're just breaking out of this downtrend. There's a nice little place to put a stop loss here. It was up a nice 3.69% last night when the market was basically up 0.5%. And it's now on this little chart here. If you go above this line and this line, it then tells you it's outperforming the Dow Jones 30. It's outperforming the index. So that should be good for this stock. Another stock that I like is Activist. Again, it's been meandering sideways. It had the sell-off. It's up 1.62. I think the stock looks quite good. Good place to put a stop loss. The peg ratio is great. It's outperforming here, so it looks pretty good. I just wanted to show you a couple of other things because I've been chatting to a few people online who are joining the Insiders Club, and I said you're welcome to send me an email and get a 20-minute chat. I think our chat was 40 minutes. I just want to show you, because some people have been asking about gold and silver, why we're not in it. And I saw a video yesterday which was doom and gloom about the world and doom and gloom about the dollar. Interesting, because this is the trend of the dollar. And you remember back here, when we broke out of this point, there is a YouTube video of me saying, which is over at here, we've broken out of this trading range, which was 81 to 79 to the upside. So that looks like the dollar's getting stronger. And the dollar-related index has gone from 81 to 88. That is huge. Well, it's near 88.5. I mean, if it was 89, it'd be 10%. 10% for a currency move in 1, 2, 3, 3.5 months is significant. So right now, the dollar is still on the way up. And this is Gold Trust. This is the biggest spider gold trust. And what is it doing? What has it been doing? It's been doing this. So hello, guys. You know, this is the top here in 2011. And some people are saying, oh, you've got to have gold and silver as a hedge. What for? It's falling. If you know how to monitor markets, yes, you can have gold and silver when the time's right. But why would you hold something as a hedge going from 180 something down to 110? It's not quite 50%, but it's almost 50% in 3 years. The trend is your friend. You follow the trend. I monitor all these things. That's why you have me. And I work for you for free. Because once you've joined, I'm taking everything out of money that I make. Well, I'm not taking it. You're paying me. We're in it together. I give you buy and sell signals. Every 6 months we work out the performance. And you only pay if you make money. So I could work all 6 months or all year for nothing. But I do it because I know what I know. And eventually what I'm doing will make money and it will outperform the markets because I've done it for 35 years. Let's zoom in here. We're still in this downtrend. The last few weeks we've had a little bit of an uptrend, so that's interesting. But I'm not getting overly excited. I wanted to show you this because this will blow your mind. This is the leveraged gold miners. So it's gold shares. Gold shares have been hit hugely. A lot of gold shares are down 85 to 95%. This ETF, Exchange Traded Fund. An Exchange Traded Fund is a basket of stocks, and this one happens to be gold mining stocks. It's currently $12.70, and look here in 2011, it was somewhere approaching 2,000. Yes, 2,000. So for every $2,000 you invested, you now got just under $13. That's why you don't buy and hold. In downtrends, you get out. The trend is your friend. Here's the dollar index, and it's breaking even out of this sideways movement. We had a little trend channel here we broke out of. So right now, the dollar's doing the opposite of what it should be doing because they've been printing money like crazy, so the dollar should be getting weaker. It's not. Gold, because money's being printed, should be inflationary, so gold should be going up. It's not. Some people say that next year, for whatever reason, there's going to be a 1929 type crash. There's going to be a repeat of 2000 and 2008. Well, if it does, and if it did happen, trends will reverse. So let's go back to our little stock positions here, and I've got a lot of watch windows here. Things like Apple, and that's come back to a correction point here, so not great, I need it to turn up. Apple will do what it did back here when I said sell it at 655. 655, the stock has done a stock split. So it went from 655 and it went to just over 300. And the first buy signal came at 425 again. Currently was 111. So 111, we had a stock split, 7 for 1. So that meant for every stock you had, you got 7, and the price was divided by 7. So now the stock would be 777 if it was the previous price. So I don't care how great the stock is, and I love Apple. Apple, where that circle is just here, was bringing out the mini iPad, but the trend reversed, so you get out. And now it's got all these great things. It's got the iWatch. It's got Apple Pay. All sorts of reasons why this stock should soar. So I hope it will. I shouldn't really use the word hope because I follow the trend. I follow a system. This is where Apple is now. Facebook looks great. Overall stock looks great. Sometimes you get hit. I've got to show you the good, the bad, and the ugly. This stock here, I don't get it. It's been... all its metrics for undervalued superior earnings are great, but it got hit last night, and I don't like that because it was breaking out to the upside. But it's only 5% of the portfolio. So sometimes if it does that, and we've ended, up from the low, then it's a case of still holding because it's a one-day blip, one-day, what do you call it? Program selling, and it's not really a change in trend. But this stock doesn't look good, and for some reason Spirit Airlines, which has been a great little stock for us in the past, is also out because the airline stocks are doing well. This one's give earnings guidance, which I can't believe. So anyway, it's out. So this is Graham Bibby saying, if you're not in the Insiders Club, come and join me. I've been over my time. I'm 12 minutes. You got anything you want to email me about, go on the grahambibby.com website or go to theinsidersclub.com, or please email my very good assistant, Paul, PACEO@richmondth.com, and I'll do my best to answer you, and even we can schedule a free 20-minute Skype call, because I'm welcoming new clients at this moment in time just before we wind down for the year end. So have a magnificent weekend, and let's look forward to profitable, fun, happy, and healthy times to come. Bye-bye.